What is going on, everyone? Welcome to the Investing Bros live show. It is Wednesday, April 3rd. Happy birthday to my brother. I almost said happy brother to my birthday, which would be weird. I have a younger brother whose birthday is today. And if you're watching, Daniel, happy birthday. Happy birthday to the rest of you guys for no generic reason other than unless you're a Cardano holder and you are loving this recent news coming out here. Also, we got to talk about some macroeconomic stuff. It is Wednesday, so of course Caleb Franzen is joining the show. But we have a report on Watch.Guru coming out today saying that Jerome Powell has no plans to lower rates, the rate hikes, until inflation looks to be better under control. If only there was somebody out there who might have had that opinion and told you guys that was what was going to happen. Speaking of that person, let's bring on the co-host today. Of course, T. Shroom from down there in Gainesville, Florida, and the long-haired god himself, Caleb Franzen, coming from Europe, spreading the good news of wait till quarter three for rate cuts, and also probably looking for a Head & Shoulders sponsor. Head & Shoulders, get a hold of him now. You're going to make millions. How are you guys doing today?
Better than I deserve, Tim. How are you, Caleb?
Doing very good, guys. Great to see you. As always, been looking forward to this all day, so we're going to jam out.
Yeah, it is going to be a lot of fun. I mean, it's a new tradition, too. You know, if we're going to have Caleb Franzen on Wednesdays, we also have to talk about hair. It's a nonstop thing. Remember, guys, if we get to 50,000 subscribers by the end of 2024, I will shave my head live. My wife might not like it, but you guys have complete control. And if we get to 100,000, we'll shave Caleb's head live. No, I'm just kidding.
I did not sign up for that, man. I did not sign up for that.
Excellent. Well, I got a great quote of the day here for us, and that is this one. You don't have to be great to start, but you have to start to be great. And I'm going to bring Caleb on right here. Even in the quote of the day section, I'm going to bring Caleb on. So this is excellent. What do you think about this one, Tim?
I absolutely love it. I have a tenet I was taught years ago by a mentor of mine that said true leaders might not always get everything right, but they always show up. If you wait for everything to be perfect to show up, you're never going to get going. No one will want to follow you. So this quote actually resonates very much with me. Sometimes you just got to keep going even when things don't go your way. Be consistent, be present, keep going at it, and eventually the greatness will follow.
Yes. Does this resonate with you, Caleb?
Yeah, 100%. I think usually for most people, the hardest thing to do is just start, whatever that is, right? And so just kind of jumping over that first hurdle for a lot of people, for myself included, that's always the toughest part, right? But
absolutely.
Yeah.
Were there a lot of people that told you not to leave your Wall Street job, Caleb, but you overcame?
No. Everyone was very supportive of me doing this.
That's good.
Honestly, I probably would have not made the decision as soon as I did if my mom wasn't just like constantly instilling confidence in me for like a year. Like,
yeah,
jump off on your own, do this. I believe in you. You can make it happen. And so that was huge for me.
That was a great question, T-shirt. That's one that we should have asked sooner, because you would think most parents, you tell them, Mom, Dad, I just got a job in Wall Street in the finance world. They're like, oh, that's dream come true. You know, make money. My son's going to be financially well off. You would think that you'd get more pushback when you go and you say, hey, I'm going to go out on my own and get off of Wall Street. But, you know, applaud to Caleb Franzen's mom. Obviously, she's a killer of a mom because she raised this guy. But how about that? Killing it with the support as well. I am excited. I'm excited about today's show, guys. Going to get into a lot. Let's just check the markets out very quickly, and then we will jump in. Instead of jumping head into the charts, we're going to start off with topics today, do more charts towards the end, or if Caleb ever feels like he's like, man, I got to bring this chart up specifically, he's going to be able to control that completely. Bitcoin slightly up 0.01%, so really that's nothing. 24 hours, we're kind of exactly where we left you guys yesterday, right hovering at $66,000. Ethereum slightly up 1.47%. The rest of the space, though, again, hovering towards zero or slash, still some red candles here. Dogecoin, our biggest top 10 loser of the day, down 6%. Let's see if we have any big gainers, any big losers today. Athena, for the second day in a row, let's make sure this doesn't change, because it was a big gainer yesterday. All right, it's going to hang tight. 27% up for Athena. BitGet token is up. Flare, Near Protocol, making a little bit of a bounce back with 6% up. As a whole, we have some gainers, with the exception of one, though, not a lot of massive gainers. Big losers today, Pendle, Core. Of course, Core still up 203% in the last week. But, it had its rally the last couple of days. Of course, they're going to have some cool off there. Dog with Hat is down. One of our coins here, one of the ones we love, Stacks, down 9% today. Doesn't mean I'm not a believer in Stacks, but it is down. Caleb, what's your thoughts about Stacks? Is this a coin that you hold or want to hold, or what's your thought when your community asks about it?
I'm in Stacks right now. Let's see. Let me share my screen here on this really quick, guys. We can just go into this super fast. I just sent you that over real quick, T-Shroom.
Yep.
Okay.
All right, stand by. There's always
Darkness.
a little fun to be had whenever we're sharing screen. And
this is all my fault, you guys, because I joined on 2 minutes before the call started. So I will take all the blame for any speed bumps.
No worries. Go ahead and send the alpha, Caleb.
Okay, so we're looking at Stacks here, daily candles. Shout out to Tim, get me affiliated with the Lux Algo guys. What I've been looking at specifically is the combination of the Lux Algo Smart Trail with the with the Super Trend indicator. And so what I'm seeing on Stacks right now is a classic retest of that Smart Trail. I'm using the 3 period. Obviously, we're in a bullish trend here. We don't need to overthink this too much. And if we put it in log scale, it really kind of puts this into perspective here over the price action that we've really been seeing since October. What I'm mostly focused on is the fact that we're coming right into this range here from these high daily closes back here from February and March. So as far as I'm concerned, this looks like, first of all, a breakout, a retest, and a potential rebound associated with, we have confluence with the Smart Trail. So Stacks looks really good to me. If we get a breakdown below here, I'll change my tune, right? 100%, because a breakdown would not be bullish. But right now, right here, I actually think the risk reward looks pretty good.
Yeah, I mean, I'm even looking at this, and you can go to my screen here, T-Shroom, and kind of back it up. Even that one spot, this Smart Trail concept on the daily chart has been killing it for support. The one place it turned red, really look at the price action and look at what the Smart Trail really would have done if it had stayed blue. Even that one, it just wicked a little too low, turned the Smart Trail concept red for a second. But as a whole, that's really a bounce off of the support band there as well. We have not touched the long-term green support band of, since we wicked down during bearishness back in August 23rd. I'll tell you this right now. As Caleb said, I'm in the same boat. That Smart Trail concept could be some killer support. If we break down, though, and head back down towards $2 and touch that green support band, based off of history, that is a massive screaming buy signal that I will definitely scoop some more of this coin up. And I don't know if it's going to get that, though. But I'm just sitting here praying, wishing maybe we could get a $2 so I could buy some more cheap stacks. But with that said, let's start off with our main topic of the day. We already got 130 people in here. Go ahead, guys, smash the like button if you guys are excited about today's show. Let's start off with the big topic, Cardano. Now, I made a video about this yesterday. If I had known news was going to break, I would have made a Cardano video today. But of course, I made a Cardano video yesterday. And then we get some big news today. People have been asking, is Cardano dead? What is it going to do for us that no other token can do? It's so far behind Solana and Ethereum in terms of all these different things. But it's coming out now. T-Shroom, I know you can get into the article and give us specifics. But we have U.S. states looking at Cardano as its use case for fair, decentralized elections. There are several other governments looking at it. T-Shroom, what are the details? Let's have a conversation about what the future of Cardano could be with this update and information.
Yeah, absolutely, Tim. Well, the headline here reads, U.S. states approach Cardano Foundation to build blockchain voting platform. So overall, several U.S. states have reportedly reached out to the foundation discussing voting systems powered by the blockchain technology. According to the Cardano Foundation, Friedrich Gregrind, these states are looking to conduct more transparent elections. So we've always known that blockchains could potentially be technology for voting, and it looks like we might be taking a step forward here in the American history of that technological integration. We have been approached, speaking at an interview at Daily Coin, Grigrin said, we have been approached by a couple of states in the U.S. saying, hey, can you help us do a lightweight blockchain solution to making voting more transparent and accountable? there's a lot more details to this, but overall, this is very bullish. The CEO ended with the interview without saying how many states the foundation is discussing with or what states are involved. So still definitely in a kind of a realm of high opacity or low opacity, some kind of opacity, to where there's not a bunch of clear details, but clearly there's a step that has been taken forward here, and this event is very illuminating. So could this be Cardano's big moment, kind of in the limelight, where there's a lot of bullish momentum behind a very, very important and huge potential use case for the blockchain? So Tim, what are your thoughts on this? Do you think that the lack of detail is maybe kind of showing that this is a little too early, that they should have waited, or do you think that this is all we need to know, that states are knocking on the door of Cardano?
Yeah, I mean, we don't want to wait anymore. I mean, elections coming up here in just a couple of months. And of course, the buzz is already circulating about how do we make sure we have safe, secure elections. This is good news for no matter what side of the aisle you sit in politically. I think the majority of crypto investors and YouTube consumers probably sit on the right side of the aisle. I would have to imagine there's more conservatives. But let's not forget, I mean, a lot of conservatives try to say the last election was stolen by the Democrats. But let's go back 8 years ago. A lot of Democrats believe that there was potential collusion, that election was stolen. So this is amazing news moving forward. And one of the reasons why, I think both sides are going to like this, because ultimately you take trust out of the equation when it comes to elections. Having truly decentralized, secure elections is something that everybody really wants. And I think some people are going to try to say the other side doesn't want that. Let's do it this way. There might be people in Washington or elites that don't want fair elections. They want to skew the numbers. But the average American, whether you identify as conservative or liberal, you want fair, unadulterated elections. And using decentralized technology like Cardano with heavy security, I think is a win for everybody involved. But I want to get Caleb's take. Caleb, first of all, are you a fan of democracy and freedom, or are you a fan of
tyranny and authoritarianism?
Yeah.
No, I'm actually a hardcore communist, you guys.
Okay.
Anarcho.
Okay, good.
No,
Okay.
I'm totally kidding.
Our blockchain.
I am our blockchain, exactly. I am a freedom maximalist, to say the least. Yeah.
What are your thoughts about this news when you heard that Cardano potentially is working? But just even from an election standpoint, but maybe even from a Cardano bullish perspective, what's your analysis on this news?
Oh man, I'm afraid I'm gonna upset some people today on this call.
Light it up.
Oh no.
This is a non-factor in my opinion. And if it was something significant, at least right now in the short term, even over the medium term, why isn't it being reflected in price action today? Right? We're not seeing Cardano necessarily outperform the rest of the market. We're not seeing it bid higher. We're seeing it bleed out just along with everything else, even though there is this fundamental story associated with the cryptocurrency today. So that's kind of step one. I think generally, it's being talked about as a voting mechanism, but like we're hearing states are inquiring about it. Is that even for public policy elections, or is that for some sort of like local city democracy type thing? Like not even any, I just have no idea. It sounds so vague to me that there's like nothing actually material in that announcement. And the person, I don't even remember the name of the person T. Shroom had mentioned because it was such a weird name. But they even said that they can't even talk about the states who are involved. Like, who is it? Alaska? South Dakota? Like, I don't want to be rude, but it's like, we're not talking about California and Texas and Florida and New York, right? Like, maybe we are, but we have no idea. Yeah, exactly. It's just like, it's so immaterial. That's kind of my point.
The truth is, I mean, again, we have no idea, but could it possibly be like Texas and Florida and some of these other states where governors have been fans of the decentralized cryptocurrency world? I mean, both governors of Florida and Texas, big fans of Bitcoin, big fans of decentralized money, big fans of saying, hey, we are not going to allow a government stablecoin, a CBDC to be issued in the United States. We don't know it is, but we don't know it's not either. And actually, in my brain, I think, governor of Wyoming, all these other states, I think it actually makes sense that maybe those bigger states like Florida, Texas, Wyoming's not necessarily that big when it comes to populace, but I think those might be the ones most susceptible to being the ones we're talking about. And I'll tell you, Caleb, because I think you're right. Eric Wong pointed out in chat as well. Let's have a debate. Even if we agree with each other, let's just do some devil's advocacy right now. Kind of wrestle through this. So my devil's advocate approach to this is not really that big. We don't see prices moving. Yeah, Cardano price is down since this news. Where I'll agree is that today, this might not be the biggest bullish catalyst for Cardano price. However, the argument or the FUD circulating is that Cardano cannot keep up with some of these other faster or easier layer one blockchain protocols, right? So the concept is no one's going to want to use Cardano. Everyone's going to flock to either A, you're more elitist, so you want to use Ethereum and the high gas fees, or you want to be fast, quick, and vigilant, so you'll go to the Solanas, you'll go to the ALGOs, you'll go to some of these other really fast, but maybe not very secure protocols. This is the step of proof we have government entities prioritizing decentralization and security and trustless systems. They're not going to Ethereum. They're not going to Solana. They're not going to Doge or XRP or they're going to Cardano. And so I think that this is, if it continues to come to fruition, it's A, the thing that Cardano specializes in, but B, sends a message to the world. Do you care about security and decentralization? Cardano is the coin for you. To me, while that might not be rippling in bullish price action at this very moment, that is the long term. We're not just talking about this bull market. That's the bullish sentiment that takes us into the next 5 years, 10 years, 15 years, 30 years. Because, yeah, we want to make a lot of money this bull market, but aren't we already trying to think through which coins will still be around 20, 30 years from now, along with Bitcoin? And moves like this, I think, are massive wins for Cardano. And when people start to realize that Cardano is a long-term play, that's more of an incentive to buy in at these lower prices. Therefore, those lower prices with increased demand shoots the price to the upside. That's my devil's advocate argument. Tell me why that was wrong, Caleb.
Just go to my screen. We can we can look at we can look at Cardano relative to Bitcoin, right?
All right, let's do it.
Since the peak, and it's basically on the verge of making new lows, right? Going back to the 2023 lows. And I know, look, I understand a lot of different coins are going to look like this, especially with how strong Bitcoin dominance has been. So again, I'm not really trying to pick on Cardano here. But again, even for me, and we don't need to share my screen, more than this. I think that kind of just does a good job of assessing my overall point. Is like price tells the picture. Right. And it's like if we want to be bullish over the long run, in my opinion, the way I approach investing in the crypto overall is I'm not going to invest in anything beyond Bitcoin and Ethereum for the long run. Because, even Ethereum hasn't been able to make new highs relative to Bitcoin since those 2017 highs. So over the long run, if we are thinking about 5, 10 plus years, history shows us over the short history that we have for crypto, right, which is basically less than 10 years outside of Bitcoin, don't own anything else from one cycle to the next, right? Just own Bitcoin, because whatever asset you're comparing to Bitcoin is not going to outperform Bitcoin over the long run. So just own Bitcoin.
Yeah, and I think I sit somewhere in between. I think Cardano has a lot more promise in my mind in terms of decentralization. It really comes down to, is the market going to value that in the long run? And I think my hunch is that it will. Right, but something will need to happen to these higher flying coins like Solana and Internet Computer comes to mind, that they clearly, if you look at exactly what's going on under the hood, they don't value decentralization as aggressively as Cardano. So but a lot of people try to shoot for the right thing, and that may not necessarily be the best way to invest. So just know that. That's kind of the way that I'm thinking about it. What we have seen historically, though, is that Cardano is a nice coin to rotate into towards the end of the cycle, towards the end of the Bitcoin, and then into Ethereum, and then into large caps, and then into altcoins. Cardano is known to be a very high flyer towards the end of those cycles. So from a just purely utilitarian, just capitalist play, that's kind of a good way to kind of expect what might happen this cycle for Cardano. From an investment in decentralized future and voting and all this, I think it's hard to get excited about any other chain, obviously outside of Bitcoin, than Cardano, for me at least.
Well, and I want to, again, we're doing devil's advocate because I the chart that Caleb showed, it's true. Like people have been screaming Cardano's about to take off. Cardano's about to take off. Cardano's about to take off. I always try, even in the videos we have titled, like, hey, like Cardano's going to wreck the bears and Cardano can go to this price. I always do kind of tell you guys, hey, it's about a timeline, and the timeline's not there yet. But take a look at the Cardano over Bitcoin chart for a second here, T-Shirt, with my screen. Long term, we are sitting on another strong level of support, a very strong trend that has been around since its existence. That's the weekly chart. Let's go to the daily chart here and take a look at some indicators. Now, this not bullish yet, but you guys know when I take a look at this oscillator, heavy money flow coming out, heavy excessive sellers. When that turns, it turns very, very fast. We've had an excessive amount of negative money flow here. We've had bullish divergences come in. We've had a lot of stuff happening. And look at how those excessive buyers are curving over. And at the same time that's happening, I turn on my indicators here. We are sitting on the green support band once again with our take profit level. So a lot of support coming in. What I will say is it's a decision point right here. Do we keep this trend, in which case it would be very bullish, or do we lose this red line? Do we start a whole new thing? Let's go back out to the weekly chart. If we lose this red line and close a weekly candle below it, then I think Cardano over Bitcoin could be in trouble. But I think this could be a sign right here that we could be about to get a bounce on Cardano over ADA. And again, I see people asking in chat, what does this news, we're not seeing it affect price action. It's about long-term stability and trust. And I think that if we see a large amount of people using, and I say people, if we see a large amount of entities, government officials within the United States, government officials outside of the United States, if we see governments picking up and utilizing Cardano, well, you got, you have Ethereum is the institutions coin. Again, high barrier of money, meaning if you're making transfers of $200, you're not going to want to use Ethereum. But if you're making transfers of 10 million, 5 million, 6 million, you don't care about $100 gas fees. That's nothing to you. We might see Ethereum stay institutional money. We see Solana being possibly the everyday simple man's money because it's just so easy to build on it, so fast, it's so quick, it's so cheap. Yeah, you might get hacked. Yeah, you have an outage for a couple of hours, but ultimately it's the fastest, cheapest option. Maybe we're seeing Cardano prove to be the actual coin for trustless government moves like elections and other things where you remove trust from the equation. It's the most secure, one of the more difficult exchanges to build code on, but that adds to its security and decentralization. I think Cardano's carving out and finding its spot of speciality amongst crypto users, and this could be the catalyst for why the price booms in the next bull market. But again, that's just my opinion. We can move on. We can move on. Let us know in chat.
Really quick. Can I just say two things and then we can move on?
All right, let's keep moving on.
Okay. First, I saw a comment from Tony. No, price does not tell the picture. Price is a lagging indicator. That could not be further from the truth. I was literally just on a phone call with my uncle. Shout out Uncle Joe. I invited him to join the live stream, so I hope he's watching. What we were talking about was that price is the equilibrium of the market. All investors come together and reflect their perspectives about the future. And that perspective about the future gets reflected into one variable, the price of any given asset. So price is not a lagging indicator. Price is actually a forward-looking indicator of where fundamentals are likely to go. So that's rule number one. The second thing I wanted to point out, I know I'm kind of raining on the parade here for Cardano stuff, but let me just be very clear. If we see a sustained bull market for Bitcoin, we are likely going to go through an overall period where altcoins on the aggregate, including Cardano, are going to outperform Bitcoin for a period of anywhere from 3 to 12 months, maybe a little bit more, maybe a little bit less. I have no idea. So at some point this cycle, if we do continue to move into a sustained bull market environment, we are going to see altcoins, including Cardano, outperform Bitcoin. I know that. I am aware of that. It is just par for the course because that's what we see every single bull market, right? So I just want to be very clear. I'm not saying that Cardano is going to shit the bed and is going to go to zero. That's not at all what I'm saying. So I did just want to kind of clarify that really quick as well, just before we moved on.
Absolutely.
Yeah, I think that's good clarification. Also, Tony, I think Tony's your now biggest fan, Caleb. Tony and Caleb, best friends for life. They might disagree on points here and there, but I'm just going to call it Tony and Caleb. That's the friendships we all need in life.
Tony, hit me up. I'll give you a free comp subscription to Cubic Analytics, my man.
Look at that, Tony. Look at that. All right.
I love it.
Let's move on, T-Stream. What else do we have on the docket today? Or do you have a thought? I mean, Caleb and I went back and forth a little bit. Do you want to chime in? Do you want to argue with us? And
yeah, believe it or not, a crypto influencer here with an opinion on something. I do. So I think that the way to approach Cardano, you really have to think about it in two ways, and this is for every crypto environment. So you can think about it just from a pure investment standpoint, and then you can think about it from this is a playground that I'm going to go interact with, right? There's games on it, right? There's NFT projects, but those can be found on every major blockchain, right? So if you're deep into the Cardano ecosystem, there's a lot of folks that we know who are, right? There's a difference between that and using it as someone would use Grand Theft Auto or a gaming console or an editing software, right? They're using the actual infrastructure of Cardano and the blockchain in a day-to-day way. It's part of their daily habit, whatever they're doing. And that's different from looking at crypto in general and saying these are going to be the basket of cryptos that are going to do really, really well, right? So there's a difference there. And just because you're dabbling and just because you've created a hobby out of crypto in one way or another doesn't mean that you are overexposed or overinvested. It's good to be aware of how much time you're putting into something that could potentially turn out to not do well at all. Not saying that necessarily about Cardano. But I do want to delineate between those two types of activities. Just because you're heavily involved in a blockchain doesn't mean that you're investing in it in the same way that someone would do an analysis of a bunch of coins and say, okay, these three are going to get allocation and the rest are getting thrown to the side. So that's kind of my take on it. What I will say is, if you're feeling like you're investing in Cardano because you have to, or else the community that you're a part of is going to feel let down, that is a thought that you may need to re-examine. If you're thinking Cardano is a good investment because you have done independent analysis and you think it's more competitive, it's more decentralized, and that's going to be a winning thesis in the future, that would be a investment thesis that I would be more comfortable with. But if you feel like you need to keep DCing into Cardano because these people in these chats or these chats over here are going to be mad at you or whatever, that's not how you should invest. Just going to say straight up. So I think there's a little bit of truth here for everybody, but this is, at the end of the day, an exciting headline that we could not only see some upside for Cardano as a result of this, but it could also mean a little bit more integrity in American voting, which we all know we could use. So, love it. I think we've talked about it enough here. Let's go ahead. Good
discussion. Let's
move
transition
on to the next story here. CoinDesk going ahead and pointing out that Bitcoin is back down below 66K as rising treasury yields catch investor attention, catch investor interest. Now those treasury yields have reached a 2-week high of 4.4% overnight due to persistent inflation and unexpectedly strong manufacturing activity. Folks, we have on our macro analyst here for a reason. This is Caleb Franzen after all. Caleb, how much of the fixed income markets do you think is playing a role here in the downturn for Bitcoin? And is this recent kind of pop-up and retest to the upside, is that kind of a signal that the risk in the crypto market is not going to rotate into fixed assets?
It's, in my opinion, not playing much of a role at all. Reason why is stocks are at all-time highs, right? So we're seeing specific sell pressure in Bitcoin and crypto right now, whereas stocks are just kind of partying on. I think I did a post this morning before the market opened that the S&P needed to gain 0.9% to make new all-time highs. And I think the last time I checked, let me just pull it up right now, the S&P 500, well, it was actually down 0.05% today. So clearly a lot of reason for panic, down 0.05%. Oh, sorry. But look, this is a massive breakout here in the market. Whereas when we do pull up something like Bitcoin right now, it's like, okay, yeah, we're pulling back a little bit. Like I just did a post on Twitter while we were going back and forth there. Maybe a little bit of a bear flag here. So let's make sure we don't break down, right? But again, I think that the market action that we're seeing right now in crypto is kind of happening, not in a vacuum, because nothing operates in a vacuum. But I would say that treasury yields like the 10-year hitting new multi-month highs, or the 5-year trending higher, or the 20-year pushing higher, like isn't really having much of an impact anywhere. to be quite honest. Maybe it's having an impact on like the super far growth risk type names. So yeah, I mean, maybe we could lump Bitcoin into that. But again, if we look at something like the 3-month treasury yield, and let's pull this out on the daily candles. Let's get this out of log. Good to go. And then let's just go ahead, and we're doing this all live because we're having a little bit of fun.
Absolutely.
No harm, no foul. Let's get that here, and then boom, look at this. We're going rapid fire here with the charts, you guys. This is epic. Okay, so in black, we have the 3-month treasury yield, and in green, we have the effective federal funds rate. Do you guys notice anything here? At the beginning of 2022, the 3-month treasury yield broke above federal funds for the very first time. And what happened 3 months later? We hiked rates. 3 months after the breakout happened in the 3-month treasury yield. Does that sound like a coincidence? No, because it's not a coincidence. And so what have we seen since then? Generally speaking, aside from a brief 1-day period following the banking crisis of March 2023, we've seen the 3-month treasury yield above Fed funds ever since. And so what is that telling us right now? Cuts are not coming for the next 3 months. But wait, it gets better. Let's look at the 6-month treasury yield. So same exact type of analysis, but a little bit of a different implication. So when we look at the effective federal funds rate today at 5.33%, and we see that the 6-month treasury yield is trading at 5.31%, that is telling us as well that no cuts are coming for 6 months. Guys, it is April 3rd. That means that cuts aren't even coming in September, right? So the market isn't telling us anything new. And this has been the case now, right? Because if the market was priced for cuts, the 6-month treasury yield would be at least 0.25% below effective federal funds. It has never done that. It hasn't gotten to that low. The lowest it got was 5.189%. That is not 0.25% below 5.33, right? So the market has never been priced for cuts. It's still not priced for cuts. And so this whole concept of, Powell's saying that they're not going to cut rates now until they need to see more. It's the same fucking story we've been hearing for 6 months plus, right? Cuts aren't coming, right? And so what I've been saying for not almost a year now, but I started saying this in July and August of last year. Cuts at the soonest are coming in Q3 of 2024. And so Q3 of 2024, based on the data that we just went over, is out of the picture for cuts. So now we're looking at Q4, right? So Q4 has to be our realistic timeline, and even that clock is ticking down.
Now, let me ask you this, Caleb. I think that's a great point. And again, if you guys are just now joining, you guys, this has been the drum Caleb has been beating. He probably was saying it before July, honestly. I remember there's so many other people been calling for cuts way sooner, and Caleb has stuck to his guns, and it is looking more and every single day like he was dead on the entire time. You gotta take what he says and weigh it very heavily because it is very accurate. My question for you, Caleb, is another thing that a lot of people have been debating, arguing, is that rate cuts should be bearish for crypto. So a lot of people are saying, historically we've seen where rate cuts happen, the stock market crashes. We've educated them here on this channel on what this means. But from your lips, from your mind, what should crypto investors be prepared for when we see a cut, when that cut could be? Let's go ahead and say Q4. Let's talk about, is there one in October? I think October will be the first one in Q4. Let's pretend October is when we get rate cuts. What should crypto holders know about those rate cuts? Why either A, they should sell their crypto because that's the top, or B, why, despite the fact that historically we've seen rate cuts have crashes to the stock market, this time is actually a bullish catalyst?
So context is always key, like all things, right? We can't just be binary. So context is key. And so when we look back at history, yes, it is true that typically cuts are followed by or are occurring simultaneous to a market decline and a correction in asset prices. Why is that the case? Because typically the Fed is backward looking. Typically the Fed cuts once shit starts to hit the fan, right? And when shit is already hitting the fan, asset prices are already trending lower because, like I was saying to Tony, the market is a forward-looking pricing mechanism. So it's able to look forward into the future and start to show signs and causes for concern. That is always the case. And so my whole thesis about rate cuts this time around is that the Fed is going to cut rates absent of a crisis. That's why I've been calling them disinflationary or non-recessionary rate cuts, because the economy has been resilient. The labor market has been resilient. The consumer has been resilient. The real estate market has been resilient. The stock market, all-time highs. Crypto, all-time highs. If you guys haven't noticed, things have been pretty damn resilient. And so when the economy continues to stay resilient, as we continue to see evidence of, even today, we had the ADP private payrolls data coming in above 180,000 versus expectations of 150K and prior of 140. This was a massive beat. We have wages growing at 5.1% year over year. For people who have quit their job and switched to a new company, they are growing their wages by 10% year over year. And that's happening with inflation at 3.1. So I totally understand people's purchasing power is going down, but actually on a net basis over the past year, people's purchasing power based on the BLS's data is rising, right? So I think that's a very key component here. And so if we get those rate cuts because of disinflation, which has been my thesis, which continues to be intact. As you guys know, we keep talking about disinflation is still intact. It's still intact. It's still intact. I did a whole video shirtless about it today on Twitter, actually. So if you want to go check that out, go support your boy. So
was that a video meant for OnlyFans and it somehow made its way onto Twitter?
I'm actually preparing people for my OnlyFans. No, I'm totally kidding.
There we
go. No. I'm totally kidding, man. You guys are
just easing them into it.
Exactly. Yeah. Exactly.
Yeah.
I was gonna say something, but I won't. Okay. So moving on. So if we get continued disinflation that leads the Fed to cut rates in the backdrop of a resilient economy, sure, because of the lag effects of monetary policy, could we see that 5% interest rates from the Fed funds perspective eventually ripple through and we get the recession? Yes. But if we have disinflationary rate cuts in a non-recessionary environment, that is not bearish for asset prices.
Mm-hmm. Yeah. And again, we've talked about that here on this channel before, but I think Caleb laid it out there perfectly. Yes, historically, we have seen when we have rate cuts, stock markets, assets crash. But it's about what caused the crash economically. Was it the rate cuts? No, it was the economy was crashing anyway, and the rate cuts were in a response. This could be a time where they actually cut rates because, as Jerome Powell says, he wants to wait to cut rates until he thinks inflation's under control. That's completely different than what we've seen historically. Now, before we move on to this topic, we have a super chat. Definitely we want to get your opinion from Eric Juan wants your opinion on gold and silver. Gold hit a new all-time high today. I don't look at the silver chart that often, but I want to hear that one. But before we go there, Caleb Franzen, in a very surprise move, no one saw it coming. Move aside Donald Trump and Joe Biden. Caleb Franzen is the new president of the United States. What do you do with Jerome Powell? Does Jerome Powell keep his job? Is he doing a good job, or are you finding someone else to replace him?
How do I get Powell for 2 more terms? Make it 4 terms. Okay. How do we make him chief monarch of the Federal Reserve? No, I'm kidding. But I would 100% reelect Powell. I think he's the greatest central banker of all time. The second greatest central banker of all time. Excuse me.
What about Gary Gensler? What are we doing with Gary Gensler?
Subscribe to my OnlyFans.
There you go. To find out.
I'm kidding.
All right. Yeah, let's go. T-Stream, do we have if we have like one more topic, we can take a break, answer the super chat. If we're done, we can answer the super chat. Do you have a lot? We have a lot more topics to break down.
Well, we have meandered into a lot of the macro talk. We talked about Cardano.
Yeah.
There was one tweet from Caleb. Believe it or not, he's actually been a little bit active today on Twitter.
He's a tweeter.
Already.
He's a tweeter.
Yeah, you can follow him at Caleb Franzen right here. But Caleb, you mentioned here short-term wedge for MicroStrategies. Let's get into that here in just a second. But yeah, let's address the super chat from Big Eric talking about gold and silver. I have been seeing gold not only hitting all-time highs, but continuing to knock out those all-time highs, moving higher. What is this rotation to gold? And as Eric asks, can you ask him about gold and silver's move?
It's pretty interesting. Gold is typically going to be inversely correlated to real interest rates. And so as we've seen nominal rates push up and inflation generally stay the same, and inflation expectations have actually been ticking higher, it's hard to say that real rates are falling in this environment. So it's been quite odd to see gold break out. So again, I was talking with my uncle about this because he's a big gold investor. Has been for quite a long time. So he's up massively in profit on his position. Shout out Uncle Joe once again. But what I was telling him is, look, exactly. we're looking at gold here over the long run, basically starting in mid 2018, and we peaked here in August of 2020 and basically failed to make new all-time highs for the better part of 3 years. When we finally got that first breakout here in November, the failure, second retest of resistance, like eventually we're going to get a breakout. And I know it sounds so obvious in hindsight. I'm usually someone who's a little bit bearish or negative or bored with gold. Look, kudos to gold investors. Take a round of applause, take a lap. You guys deserve it because it's been a hellish 3 years watching asset prices do really well in this environment while your pet rock has been treading water. So, 2,300, congrats. If I own some, which I don't, I would be probably looking to sell some and rotate into large cap tech. But I don't. So I'll just take my fiat and buy more large cap tech.
Yeah. I like it.
Let's really quick. He also asked about silver. I'm sorry. Let's get to,
for sure.
Eric's a great guy. He's always engaged with me on Twitter, and I'm pretty sure he subscribed to Cubic Analytics. So if we look at silver here, you could make the case that we're seeing something very similar kind of take place, but instead of that horizontal trend line, we really have it as a diagonal. So we're getting that same breakout. We should expect to see some follow through. What I'd be looking for here is a return back to this range, basically at $30 an ounce. Right now we're trading at 27. So that's about 10% upside. If and when we get there, I would probably expect us to cool off a bit and maybe get a 5 to 8% pullback on something like silver. And then we'll reassess because, maybe what happens is we get that extension into the range, the brief rejection, and then we get the breakout to new highs, right? And if you're really a silver bug, I guess, what you're doing here is you're drawing a fib from those 2020 highs down to the lows of 2022 in September and August, and you're targeting the 161.8, and that gets you to $42 an ounce. So versus today at 27, that's pretty attractive risk reward. That's pretty attractive upside. So even though I'm very acknowledging of my own personal bias to not own these types of things, you can look at the charts and you can make the case, right? So this doesn't look half bad if you're looking at it from this type of perspective.
I do want to point out, though, for anyone who's sitting here thinking, man, should I be investing in gold instead of Bitcoin because it's hitting new all-time highs? Let's take a look at these charts here, people. January to now. So if you invested January 1st in Bitcoin, even after the pullback we're currently in, you're still up 56%. If you had invested at the bear market bottom back in fall of 2022, you're up 323%. What are you doing if you're buying gold, though? Well, since January, your all-time high is up 11%. And if you had bought back in that bear market bottom in 2022, you're up a whopping 41%. So just because gold's at an all-time high, don't think that you need to be investing in gold's your safer investment for long-term wealth. It is literally pennies to the dollar of Bitcoin investments. I'm not saying don't own any gold whatsoever, but anyone who might be thinking, well, gold's an all-time high, does that mean it's a better investment long-term? It'll make me more money? The facts simply show not whatsoever. So let's go ahead and transition here, T-Shroom. I know you said we had some more things there. Thank you for the super chat, Eric Wallen, and supporting the Investing Bros. Anytime. We try to answer as many questions as possible, but we never miss a super chat. If you guys want to support the bros, ask us questions with super chat. We would be more than happy to answer every single one of them. T-Shroom, let's get back into some of our topics. Before we get to our reformed elf, some of you guys know yesterday it came to light that our elf was demonic, so he's been replaced with a angelic elf or a cherubim, as we sometimes call them.
Absolutely.
What do we have in the topics before we get into the factoid of the day?
Yeah, so just wanted to jump over to Caleb, some of the thoughts you've been sharing over on the Twitterverse, formerly known as X. So you can follow him here, Caleb Franzen. And, you talked about the short-term wedge for MicroStrategy relative to Bitcoin, mining stocks shown via MSTR versus WGMI. So could you talk to us a little bit about kind of your thesis here about how achieves a bullish breakout, then the target to potentially 1,600% Fibonacci extension?
I'm just seeing that massive typo there, which is why I was going like this. So that's supposed to say 161.8% fib, but hey, it is what it is. So yeah, I mean, one of the things I've really been talking about, T-Shroom, if you want to go back to that and just pull up the chart there on your side from the Twitter post, that'd be great. This is Microstrategy relative to the Bitcoin miners. So I'm looking at WGMI. This just looks like a classic wedge. And I've come out over the past few weeks, basically since the beginning of March, and said, I'm rotating out of my Bitcoin mining stocks, and I'm going to be raising capital to allocate into Microstrategy. My first purchase of Microstrategy was at the end of January. So I think I got in around like $4.97. And as of today, my cost basis is $713 a share. And so I think today it's trading just above 1,600. So I'm chilling in profit, and I'm still allocating. So I might buy more on this call before the market closes today. We will see. But on a relative basis, this wedge can't really be ignored. And at one point today, literally before we hopped on this call, MicroStrategy was up 5%, and the Bitcoin miners were flat, basically at a zero, right? So again, that's another 5% of outperformance. Certainly that's kind of come back down a little bit today. As I look at MicroStrategy right now, up 1.5% on the day versus something like WGMI down 1.2. So even today, we're seeing almost 3 full percentage points of outperformance in MicroStrategy relative to the Bitcoin mining stocks. And so again, as I look at something like MSTR relative to those miners, and we're setting up in this range, you could even see like from when I did that post, we came up into the top of that upper bound. We didn't quite get there, but man, we were pretty close, right? So again, we haven't been able to achieve the breakout yet. But again, what I'm looking at here is, let's say I buy that today. We're talking about 45% outperformance in MicroStrategy relative to the Bitcoin miners to get to 145 on a relative basis. And so in order for that to happen, Bitcoin is going to have to rise. If Bitcoin is rising, MicroStrategy is probably going to outperform by at least 2x, right? Maybe 3x. And so in that same environment, the miners are going to do really well too, theoretically, right? They've certainly been lagging over the past month with all these halving concerns. But if the miners are also up and MSTR relative to the miners is up 45%, we're talking about a potential scenario here of MicroStrategy itself being up anywhere from 50 to 100% is how I'm looking at it from here, right? And so when MicroStrategy today is trading at 1,600 and we're talking about another potential 100% gain, we're talking about 3,200 a share. And I've seen some targets that can get us easily into like the $2,500, $2,700, $2,800 range. So I'm not ruling that out by any means.
Mm-hmm. Yeah, absolutely.
Yeah, another super chat from Eric Wallen said CleanSpark outperformed MicroStrategy overall 1 year. But it sounds, and sometimes when you see that, you see a flip though here, Eric Wallen. Is that what your analysis would be here, Caleb? Maybe CleanSpark over the last year outperformed it, but it might be a flip, and now MicroStrategy is ready to kind of run away from those miners.
Well, I mean, let's look. So if you go to my chart right now, we're looking at CleanSpark relative to MSTR. And so this time, exactly 1 year ago, yes, it has outperformed, right? Because where are we today? We're April 3rd. So that basically gets us to right here. So, okay, great. You know, CleanSpark is the only thing that's outperformed on a 1 year period, up 13%. But during that year, if we look at CleanSpark, what have investors had to endure? They've had to endure this 55% drawdown. They had to endure this drawdown right here of 35%. They had to endure this drawdown right here of 52%. And currently right now, they're sitting in another drawdown of 33%. So certainly that volatility has also benefited it to the upside, right? But I also just want to observe, like, the probability that someone has stayed in CleanSpark, and look, if we put this in a regular scale, this is really going to look substantial in terms of those declines, right? Mm-hmm. The probability that someone has sat through two 50% drawdowns over the course of a year and not sold or reduced their position is really low. If you have been that person, maybe Eric is one of them, congrats. Like, seriously, I mean that, because that takes a lot of conviction. Yeah, and T-Shroom, love it. Like, I'm stoked for you guys if you did that. But again, if we look at something like MicroStrategy over that same period, it's also experienced that same volatility, right? Mm-hmm. This was almost a 40% drawdown. This right here, 34 for CleanSpark during that period. That was a 55% drawdown, if you guys remember that. This was another 55% drawdown for CleanSpark. It was only 40%, quote unquote. And right now in this environment, quote unquote, only down 19%. So certainly all of these assets are tremendously volatile. If you had the hindsight 1 year ago to be buying CleanSpark over everything else, congrats. Because this time last year, we were hearing about Mara being best in class. We were hearing about Riot being best in class. There was talks about Iron being best in class. There was talk about Cypher being best in class. I didn't really hear people start talking about CleanSpark on a widespread basis until the third quarter of last year. And so it's always rotating who people consider to be the best in class, because they look back on a trailing 3-month, trailing 6-month period and say, oh, this one's performed the best. So this is the one that's best in class. And it's like, well, what were people saying 6 months ago, though? Were they picking that one to be the best? And so, like, it's a little bit of hindsight bias when we just select CleanSpark. But again, like, I genuinely do congratulate the people who have been in that trade for the past year, because yes, if you've been in CleanSpark, you've outperformed Microstrategy by 13%. Congrats. If you've owned any one of the other miners, and there are plenty of them, I won't rattle them all off right now. If you've owned any one of them, you've significantly underperformed MicroStrategy.
Yep.
And Bitcoin, for that matter.
And as proud as I am about my strategy with CleanSpark in 2023 into 2024, I didn't have any MicroStrategy during that time. What's interesting is now, within the last 2 months, I've accumulated the most MicroStrategy I have ever had, obviously going from zero. But I bought some and I added to that position this morning and then right before the stream, because there's a lot going on at MicroStrategy, and with the dynamic between holding that amount of Bitcoin on their balance sheet and being able to print new shares of their stock, right? That dynamic ultimately leads to what could potentially, I mean, if we start talking about a 1.5 million Bitcoin, right? That dynamic that Saylor has over there, with being able to print shares and being able to reduce shares, is essentially a layer 2 of supply and demand for Bitcoin, and they can start playing with that in a way that I've heard some podcasts where they get into the details of that, and it could be extremely beneficial for shareholders. So that's something to continue to think about. And if it's anything like the past, MicroStrategy's shares are going to do very, very well. Now, you're listening to this outside the U.S., and you're like, T-Shroom, Caleb, Tim, I can't buy MicroStrategies. I don't have an American LLC. I'm not an American citizen, so shut up about it. Well, yeah, we're sorry. In Europe, though, you can get Robinhood, and I think you can buy American stocks now. So that's pretty cool.
Yeah.
But yeah.
Well, and I want to, before we move on, I want to just take a second to educate the audience, because Caleb made some great points there. We're looking at the CleanSpark chart here, T-Shroom, and I want to start off. He talked about several 50% pullbacks. However, just take a look at the price action from December of 2022, right, to this more recent high we had. Of course, we pulled back last couple of days, but who looks at this price action and says that that's a bearish looking chart? It's not a bearish looking chart. But the reason it has 50% pullbacks is because, guys, guess what? If you bought back in December of 2022 and you held all the way to that top right there, we're talking about 1,300% gains. This is something that people in the stock market just can't even comprehend. A year and a half, 16 months, and you can potentially 14x your money. That's unheard of. Well, guess what, guys? When you have these massive rallies, they come with significant pullbacks, like 50%. The reason I'm saying this is because when we start, and we're going to look at this in the future, guys, when we're talking about some of the top moving altcoins, like Solana, like some of these meme coins, like some of these top coins that have these explosive movements, when we say, don't be surprised if Solana has like a 50% pullback, 20, 30, 30, 40, 50% pullback, it's because when you have explosive upside, you also have explosive downside. And like, for example, if I go back over to that CleanSpark chart, I'm just typing in CleanSpark, even though that's not the right way to do it, CLSK. Take a look at even the bear markets, right? So this is just volatile markets. We ended up dropping significantly here from this high down to 2022, if my chart will work for me. Look at this. We're down 95%. But guess what? Anyone will look at this and say, oh, a price fell 95%? That's really ugly. A lot of bears got wrecked shorting CleanSpark. Why? Because look at these different bounce ups. 120% rallies during a bear market. 100 and what was this one? I think was a little bit higher than that. 150% rallies during bear markets. These are normal price action movements for volatile assets like CleanSpark, like a lot of altcoins will be. I want you guys to be prepared when you hear us talk about 50% pullbacks during this bull market. That's normal. That's a part of the game. You do not need to be doing heavy investments with 5x, 10x, 3x. If you want to do some scalp trading, go for it. But crypto is the world where you can turn a little bit of money into a lot spot trading. You're not going to do that Forex trading. You're not going to do that in the stock market. That one you have to leverage. Crypto world, though, just spot buy. And unless that coin goes down 100%, your investment is always live. So if you guys are new here, think about it that way. Do not be scared of the 50% pullbacks. When he says T-Shroom and Eric, good for you for holding during 50% pullbacks, to me, that is the life of a crypto investor. You endure the 50% pullbacks because that's nothing when it talks about a full-blown bull market.
The diamond hands, baby. The conviction in scarcity, 21 million. All right, let's go ahead and jump on into the factoid of the day. And believe it or not, it's actually brought to you guys today by Invest in iTrust Capital. This is where if you are in America, you'll be able to get an IRA with the #1 provider of crypto IRAs. And the benefit here, obviously, is the tax advantage, okay? If you are selling Bitcoin, you're selling any crypto that can be purchased through the IRA here from iTrust Capital, you're going to have to pay capital gains tax, right? Well, you don't have to if it's an IRA. You pay your income tax rate upon retiring, right? So it's a great reduction in how much overall you're writing to Uncle Sam in the form of a check. Head on over to iTrust Capital. You can get the link in the description of this very video that you're watching right now. It's the very first link after Caleb's links, which you should also check out too. Speaking of which Ronald co-founded Apple Incorporated? Was it Ronald Wayne, Ronald Swanson, Ron Weasley, or Ron Howard? Not all at once.
Well,
Okay.
B and C are fictitious. Ron Howard, I think, is a real name, but that's an actor. But it also could be the name, I guess, speaking of a co-founder. I'm leaning towards A, Ronald Wayne, because I have no idea who that is, versus Ron Swanson, Ron Weasley, and Ron Howard I've heard of before. What are you thinking, Caleb? We'll go in together on this one.
If we're going in together, I got to go with you on A, Ronald Wayne.
I just don't know. There's an outside chance it's Ron Howard. I give it a less than 0.1% chance it's B or C. Maybe a 10% chance of D, and a coincidence that the founder has the same name as an actor. But there we go. We went with A. All right. We're safe. We're safe.
There he is.
That's like 4 in a row for me now, T-shirt.
Ronald Wayne, the little-known co-founder of Apple Computers. And there he is, alongside... Wait. Go ahead.
What's his website? Go back there really quick.
Yeah, go back.
Scroll in. He has an official website. Let's check out his official website.
It's selling a book.
Here we go.
Counterfeit trust and the nature of money. No way.
Interesting. Oh, he's like,
is he a Bitcoiner?
Super orange pilled. He might be. He might be the reason why they had the Bitcoin white paper in their OS for so long on accident.
Hold on, I'm going to look it up.
What a coincidence. I had no idea that this was going to be the case. He's like in a hard money.
Yeah, interesting. There's no way he hasn't gotten into Bitcoin, or at least gold. It's 90th birthday in 2024. Ooh. Oh, so happy almost birthday there.
Coming up.
Ronald. And congratulations on starting one of the largest electronics companies in the
world.
world.
Ron Wayne and Satoshi. That's hilarious. In the comments from Zach.
Yeah, maybe. I mean, maybe.
Oh my gosh!
Let's see how much his book is.
Wait, did you know? So I'm not finding anything about him in Bitcoin, but there's things like saying "Don't be the Ronald Wayne of Bitcoin," and it's linked to stories. Apple's third co-founder, Ronald Wayne, sold his 10% stake for $800 in 1976.
Buddy, oh man,
he had 10% and he sold it for $800. Oh, that's rough. That's rough.
And now he's not into Bitcoin. Okay, well,
yeah,
that adds up. Him and
Peter
I can't
find anything on if he's in Bitcoin or not, but I do know he made a colossal mistake back in 1976.
Absolutely. Well, there's a Peter Schiff joke in there somewhere, but before we sign off, because we're nearing the end of the show, Caleb, what are some? Are there any trade setups you're seeing out there on the charts, or are there any new altcoins or anything that you're really liking? Is there any...
T-Shroom, he can't tell us trade setups. Those are for Patreon members only.
That's right.
No. I'll sprinkle some stuff in. Come on, you guys know I always love sharing alpha. I love sharing alpha. Okay, first and foremost, I know it's April 3rd, but on March 31st, we had the monthly close. We also had the quarterly close. We had the weekly close. We had the day, the whole 9 yards, right? I shared some analysis here looking at total crypto market cap with the 24-month Williams percent R oscillator. 24 months gives us 2 years. When we look historically at when we get those first thrusts above the overbought threshold, happened in May of 2016, and my stop sharing thing is right here, so I can't see the exact date. Either way, I did the analysis, and in past bull markets, total crypto market cap peaked 20 months and 16 months after that signal flash. So let's talk about 18 months from March of 2023. That gets us, what is that, to November of 2025 with an average of 18 months. So, I did a whole piece this last weekend talking about Bitcoin being higher for longer. And guys, this was probably one of the most conclusive, in-depth reports that I've literally ever done, covering Bitcoin, total crypto market cap, others, all of these different long-term indicators, signals applied to different time frames, so on and so forth. And so, I shared a tremendous amount of alpha here. If you guys want to access some of that, go check it out on my Substack. If we want to talk about some of the short-term trade setups, let's see here. I did a full report today on this, actually. Let's go over render, because I really like this chart.
You want me to share your screen?
Ooh.
Oh,
Vendor,
yes.
vendor.
Okay.
Please. For some reason, the quality is not coming out super great, so I do apologize. But again, we're looking at the same indicator setup that I was looking at for stacks at the top of this call. So we're looking at the Smart Trail indicator from Lux Algo Signals and Overlays, and then I'm also using the Super Trend. And so I did a full report on every single altcoin that's retesting a bullish Smart Trail indicator right now. And so render for me is pretty much at the top of that list, retesting that zone. This looks really attractive. If you don't think that the AI story is over, I certainly don't think it's over, then this is probably an area to be shopping. We have really clear risk reward. We have really clear invalidation. If we get a return back to those cycle highs, we're above 13. We're trading around 950 today. So, back of the envelope math, basically, 35, 40% upside to get there. And if we have to take a 10% loss, we're still talking about 3-4x risk reward, which is still really attractive to me. So again, is every indicator perfect? No, we look at the Lux Algo signal here. We had a breakdown and we went through a couple months of sideways consolidation, right? But look, even if you were a buyer here and you sat through this pain for a little bit, you were able to ride this thing from $4 all the way up to 13, 14. Right? So maybe patience is just key in this market, just a novel idea, right? You could have been a blind monkey who threw a dart at a dartboard and, invested in any cryptocurrency and had a pretty damn good probability of being up anywhere from 3 to 5x since October and November of last year. So maybe just sitting through some of the volatility is what we need to be doing. Embrace it, like we were talking about with that analysis of CleanSpark. And I love what Tim mentioned. It's like, look, this is the arena that we're operating in. This is the volatility that we're signing up for. These are the types of consolidations that we should inherently be prepared for and be willing to sit through. And if we're not willing to sit through them, how are we going to control our risk to mitigate so that we get stopped out and don't have to sit through that entire drawdown, right? So yeah, it's a pretty important lesson there, I think, for all investors, regardless of their time frame.
Absolutely. And traversing these markets in crypto, they're difficult. And a lot of weak hands will be shaken out. But you're tuned into the Investing Bros so that you'll have a chance at not being one of those weak hands and growing a deep conviction, well-rooted in what is actually valuable here in the markets that we're investing in. Another way to get clued in on what is valuable and how you can build your conviction is to go over to the video you're watching now. Go to the first links. This is where you can get linked up with Caleb and learn more from him. Following him on Twitter is 100% free. Following on Substack comes with a fee, but it's absolutely worth it. And there is a free edition as well. So go ahead and head on, check out these links right here. And if you accidentally slip down to the iTrust Capital link as well, you'll be just fine. Just go ahead and click that, check it out as well. But definitely go ahead and check out everything, all the links that you could ever find in the whole world. Check them out though. But
just go down and play in that description. Just
that's right.
Take a little travel down to that description. Check out what the links are. Look at the Lux Algo. Look at, if you guys need a VPN, it's down there. If you guys need a trading exchange, It's down there. If you want to find out how to follow Caleb Franzen, it's down there. So, go check out the description from time to time here. As we wrap up today, reminder to all of our members, guys, we got a members-only stream right after this in Discord. If you're a member, you're not connected to Discord, get that done here. If you want to become a member, you don't even have to go all the way down the description. Hit that little join button right below the video you're watching right now. Become a member. Link to Discord. We got some great stuff over there. We do a weekly members-only stream. We do trade setups. We talk about a lot of different things. Make sure you guys are in that Discord group. Before we go, Caleb, anything you want to say to close out the show today and send our listeners away just feeling merry and delightful?
I'll stamp what Thug Nasty said. Don't do drugs. Yeah, exactly. No, guys, this was so much fun. It's always a pleasure. I really look forward to coming on every Wednesday. So this is the highlight of the week. Really appreciate you guys. Thank you for the shout out there, T-Shroom. And unfortunately, it's going to be another 7 days until we do this again. But I know you guys are going to keep rocking on without me. So keep it up.
It's going to be great. Well, guys, as we close out today, my final advice to you, do not be the Ron Wayne of the crypto markets and sell your 10% of Apple at $800. With that said, we love each and every single last one of you. We'll see the members over in Discord. The rest of you will see you tomorrow. Adios.
Trying to make paper, turn that better to cake. Money like Lego, connect the dots that bank. We are investing bros. We are investing bros. Army pipe, lethal on trade. Entries and exits, worthy of praise. Tim, the professor of the TA. Shout it out loud on the PA. T-Shroom's news, got the word. Doing better than what he deserves. Beamer, leave no evidence. Soon fly coop with his dividend. Trying to make paper, turn that better to cake. Money like Lego, connect the dots that bank. We are investing bros. We are investing bros.